Sandra, the Fed is going to wrap up its two-day policy meeting. It has already made unprecedented moves to bolster liquidity. So the focus will be on what the chairman says about the outlook for the world's largest economy for now. No, it's going to be a while. Steve Liesman joins us now with more. Hey, Steve.
Good morning, Joe. This will be an absolutely historic meeting as Fed Chairman Jay Powell steps to the podium with the Fed essentially wearing two hats, regular monetary policy, but also financing the shutdown. This will be the first meeting since all of these programs have been established here. So the Fed does monetary policy, Powell does monetary policy, rates, regular guidance, quantitative easing, economic outlook, credit market function. That's the normal stuff. And now Powell steps up as really the trillion-dollar financier of the shutdown. Take a look at the balance sheet so far. The Fed has already raised its balance sheet by $2.3 trillion. A lot of that has to do with market function and getting Treasury markets, mortgage markets to function. It's actually eased off that just a bit, but it's about to explode. The Fed has some programs working, but look at the $2 trillion of programs that the Fed has yet to launch, and we're waiting on these. A Main Street lending facility for $600 billion, corporate credit, which will buy some secondary or a speculative grade credit markets in the secondary credits in the secondary market, along with primary, an asset-backed facility, and of course this municipal bond facility at $500. That's just some of what the Federal Reserve is doing. Put it all together, which Morgan Stanley did. They wrote the Fed will increase the size of its asset holdings by an additional 65% or $4 trillion. Those purchases, paired with the Fed's credit facilities, would bring the Fed's balance sheet to a total size of, wait for it, $12 trillion. It's at 6.5 now, or roughly 50% of GDP by the end of next year. And that's not even the half of it, guys. What's really going to be interesting today is that Powell, as the Fed chair, used to have a responsibility really to markets, credit markets, equity markets, and by extension to the public. Now he steps up, and a lot of the questions will be about where are these programs, how are they running. It's an absolutely new role for the Fed chair to play, and we'll see how he handles it. Joe?
Actually, Steve, go ahead, Joe.
No, go ahead. That gets you.
Well, I just had a question, Steve, in terms of what you'll be listening for from Powell, in terms of how long you think these programs are going to last. What will we hear today?
I think we're going to hear the phrase or some euphemism of the phrase of whatever it takes. I think you ask a really good question, Becky, because there's been some clamoring out there among the Fed observers for a really solid forward guidance from the Fed. I don't think that's absolutely necessary now because I don't think the market is trading with any concern right now that the Fed is not going to be there down the road. But I'm interested in how this sort of pivot from a guy who was, or a role where you're responsible to these financial reporters about how you're doing with QE and Treasury market purchases. And now the Fed has this incredibly different public-facing role, financing mid-sized companies, financing municipal bonds. It is now in a place where Powell may learn a reason why other Fed chairs were reluctant in the past to assume these roles.